All right, hello everyone. We're going to quickly go over the Robinhood portfolio. The portfolio did not have a good day today. I think the Dow Jones was down almost 400 points, maybe closer to 300 points. But yeah, the Dow Jones did not have a good day, and my portfolio tanked. $238 was lost. In the after hours, I am down $2. So we're starting to see that the markets are sort of going back because there's a lot of tariff fears. I think that December 15th, if a trade agreement is not reached with China, there will be more tariffs. And I guess a lot of people are starting to get scared and selling off here. For the past week, I am down 1%, and the past month, I am only up 0.4%. So definitely a lot of volatility within the markets. Volatility is back. But we're just going to quickly take a look at what I've been doing with my portfolio. I have not made a video in almost 4 weeks, or maybe 3 weeks, but let's quickly take a look at what stocks are in the portfolio currently. Apple 258. I still hold 10 shares. You guys know I like Apple. 179, and I am up pretty big on Apple. That's closer to 50%. So that's actually just incredible to see that Apple has still have pretty much solid gains across the board. But today was obviously not a good day. It's down 2%. I lost $53 with this stock, but I continue to hold, and we'll see where it goes from here. McDonald's, $193.12. You guys know that I traded out Disney for McDonald's. A little bit overvalued here, but if you look at the past 3 months, it is down 11%. So, I'm hearing a lot of, people saying that they probably want to buy McDonald's around $170. And for that to happen, and this stock would probably have to drop another 11%. So I don't really see that happening, guys. And I just think that, McDonald's is a very good company. So it probably doesn't matter when you want. Obviously, it probably doesn't matter when you want to buy it, but obviously you want to buy it on discount. I did not buy this company on a discount. But let's take a look at my position anyway. Average cost 192.83. I added some more shares. I think in the last video I had 10 shares. Now I have 15 shares and a portfolio diversity of 9%. So, I love Disney. Disney actually went back up. I had an average cost of 129, and it's all the way up to like $150 now. So that Disney Plus is really, giving investors something to talk about and invest into the company. McDonald's is pretty good stock. I still like them right here. And again, it's down 11%. So I'm jumping right on in with this company. Johnson & Johnson 138. It looks like it had a very nice spike in the after hours. I wonder what's going on there. I think they announced that there's some news about their talc powder or something like that. That they didn't find anything abnormal with their talc powder, I guess, but it's up in the after hours, $1.17. I continue to hold at 129 for 25 shares. I'm up $230 with the stock. Dividend King, I like them. AbbVie, $86. 50 shares for average cost $65.73, and the total return is over $1,000. That is just, I don't know, I have no words for that. Total return is up 30%, so probably more than that had the markets not tanked today. I lost $51 with this company, but I continue to hold, and I continue to get paid very well with the dividends. I think I'm at for the shares that I've bought, I think I'm at probably around a 6% dividend yield, or maybe like 7%. But total return is 1,000. So AbbVie is just absolutely crushing it, and I continue to hold and see what it does. I would like to see this company get back into the $100 value, but it's probably not going to get there with all the news coming out about the tariffs. So definitely watching them. Shell, $56.44. Oil has been in a bear market, guys. It's been pretty brutal. I had ExxonMobil in the last video. I said I was going to keep buying ExxonMobil, but I took the money. I went on ahead and actually sold for a loss for ExxonMobil. I think I lost about $25 with that company. And I put the money into McDonald's just for a little bit more stability. Oil's in a bear market. The stocks are tanking. 50 shares for average cost of $55.55. Total return $44. Again, oil is absolutely getting slammed, and I continue to hold Shell because I have a lot of faith in Shell. I feel like they have the best roadmap in terms of energy stocks to weather this storm of oil correction. And again, if you love oil companies, ExxonMobil is on sale, Shell is on sale. OXY is on sale. They are actually taking a beat down. I think Warren Buffett and his you know, his people, his firm bought some more OXY. They trimmed Wells Fargo and they bought more OXY. So he's going a little bit more heavy with oil. But I continue to hold Shell, and I was up $200 on the stock. Now I'm only up $44. But I like Shell. Altria, $50. 50 shares. Average cost $48.29. So Altria has really been spiking up here. For the past month, it's up 10%, and this stock was very bearish a few months back. A lot of people thought that this stock was going to go to like the 20s, and I just absolutely thought that that was ridiculous. But Altria continues to go up. They're up for the past 3 months. They're up 12%. But I continue to hold. I'm getting paid very well. Nice capital appreciation, up 24%, $485. And don't forget, they recently increased their dividend. So their dividend was around 80 cents. I think now it's 84 cents. So, once the company increases their dividend, guys, that tells me that the company is, doing, I wouldn't say remarkably well, but the company should not be facing any headwinds. They just increased the dividend, so there has to be some good news within the company for them to go ahead and do that. But I'm holding Altria here, and I'm getting paid very well, I guess. AT&T, $37.24, $35.25 is my average cost. I'm up $99 on them. Dividend Aristocrat, I don't have to much say much about them. Next Era Energy, $232.23. And this stock is very overvalued, but I bought them anyway. I like Next Era Energy, and the thing is that I bought this stock when it was like 207. I bought this stock when it was like $150, and had I just held from $150, I would be. This stock would be probably like my best performer in the portfolio. I like the stock, and I just need to hold on to the stock. I need to stop selling the stock because this is a very, very good company. They have the best roadmap in terms of utilities and solar energy. I know a lot of people like Tesla, a lot of people like those cars and their solar panels, but I think Next Era Energy, they should not be slept on. This is a very good company, a well-managed company, and if you take a look at the chart, their chart is absolutely fantastic. 28% for the past year, and for the past 5 years, it is up $123. So Next Era Energy is quite overvalued, but it's overvalued for a reason. And again, these better companies like McDonald's and Next Era Energy, you get what you pay for. So if you want to pay for the best companies, you might have to pay a little bit more than what you are looking to buy. So Cisco, $44.01, and take a look at my average cost, $43.95. I bought Cisco because, I thought that I wanted another tech stock in the portfolio. I thought that Apple was, I'm very bullish on the tech sector, but I only had Apple in the portfolio, and I do love Apple a lot, but I wanted another tech stock, and I was looking at Texas Instruments, but quite overvalued with them. So, I'm still looking for bargains. I'm still looking for the best deals. And, Cisco has been taking a little bit of a beating here. Their earnings was not very good. The last earnings report, and the stock did tank. For the past 6 months, it is down 6%, and for the past month, it's down 7%. So, a lot of people are saying if it gets down to $40, which is actually a 52-week low, that they are going to go all in on Cisco, and this is a cash cow. The market cap is $192 billion. So this is a blue chip tech stock that is on sale. One of the few blue chip companies that are, or blue chip tech stock companies that are on sale. So I went on ahead, I put 25 shares into Cisco, and it kind of helps out Apple a lot because that's my only tech stock in the portfolio. Now I have 2 tech stocks in the portfolio. So a new residential investment, $15.76. I have 100 shares for $15.65. So what happened with this company is that, I had an average cost in the previous video, it was around $14.25 or something like that. But I ended up selling out once the company got around $16, and they recently had a downgrade. A firm might have downgraded them or something like that, and the company dipped. A lot of people sold. So it got back down to about $15.24. And I was not really expecting that downgrade to happen. I sold right around there, around that 16 dollar mark, because I've been saying that this company is very risky. That dividend yield is over 10%. So I know they have done a good job in sustaining that dividend, but again, guys, I don't know how this company is going to play out if the market were to correct, or if the market were to crash. I just don't know. This is a very risky company, but for 5% portfolio diversity with an average cost of $15, I can deal with that. I can deal with a 5% portfolio diversity. I think in the previous video, my portfolio diversity for this company was around 10%. So I kind of parked the brakes with trying to manage the risk a little bit with the company. I still get $50 dividends, which the portfolio is still contributing $100 dividends each and every single month with all my combined companies that I have. I made sure that I'm still getting that. But the company, a firm downgraded new residential investment, and that I just jumped back in. So really interesting to see there. Power shares. The Power Shares ETF, $42.66. Not much to say about them. I just hold. I hold, and I just keep getting that dividend. And it's quite interesting to see how much that dividend has actually been paying out. I'm trying to get it to work here, and you guys can see those dividends. So let me just filter this out a little bit. Let's see. There we go. So dividend, and it just keeps paying. Look at this. It just keeps paying every single month. And I want to add more. I want to keep adding more, and I want to keep getting paid monthly, so I can get $25 each and every single month. That would be fantastic. But you guys can see my dividends, and you can see a lot of compound investing going on with this ETF. Very strong ETF filled with real estate and real estate and utilities. So, my portfolio is a little bit heavier on real estate and utilities because, I have NRZ and Nexter Energy as individual companies into the portfolio. So, it's very nice capital appreciation. It's almost up 10%. So, I'm just trying to get out of this, guys. And I think that's going to be it for the portfolio. So, not a good day in the market. I was actually up $31,000, but the market's tanked, and I took a beating with some of my companies here. Let's quickly take a look at those dividends. I know a lot of people probably saying, what's the deal with those dividends? You guys can see that I actually captured KO's dividend. See, I had KO for a minute there. I did a swing trade with them. I didn't know I captured their dividend. That's I don't know. That's crazy that I captured. I did a swing trade with them, and I captured their dividend. I captured ExxonMobil's dividend. Wasn't really trying to do that, but I captured it anyway. Johnson & Johnson would pay me $23 Nexter Energy would pay. So you guys can see that I did. That's well over $100. That's not even counting the Power Shares ETF, which will pay between $18 and $19. So there's a lot of money in dividends coming, and that's going to save my portfolio from this dip. Not much to say about my portfolio, guys. I have about 11 companies. I think Cisco is a pretty good buy here, $43. I would like for this stock. I would like to have gotten this stock a little bit lower than that, but I'm happy with this position. Let me know what you guys think of the portfolio. NRZ, I shortened my position with them. Nexter Energy, I bought them again, even though they're overvalued, and we added some more McDonald's. So I hope you guys had a great trading day. Again, just be on the lookout for the markets. There's going to be a lot of news coming up with the tariffs, and just be mindful of what you buy or put into your portfolio. I'm going to wrap things up here, guys, and take care. See you next time.